So we'd expected numbers to come down basically to remove Huawei from the revenue trajectory. And this is something that almost all semiconductor companies are going to have to deal with to greater or lesser degree. And Broadcom's one of the first to report ex-Huawei. What Hawk is seeing, though, is not just the direct Huawei impact, which, is not fun, but it's manageable. You can quantify it. He's seeing, a metastasization. It's spreading. He's seeing greater uncertainty among their customer base as a result of the Huawei issues, broader trade wars, macro, and everything else. And so that's the differential, I think, between the direct impact of Huawei and what we're actually seeing from Broadcom. And this, like I said, is going to be something that everybody is going to have to deal with. Semis in general are very macro-related. They're very global in terms of their supply chain, and anything that's disrupting that is going to be a problem.
You maintain your outperform rating on the stock. You cut your price target to $300 a share, Stacy. I'm wondering what you think the catalyst is going to be. A lot of people had been hoping prior to this report that second half would show some signs of hope, and now that looks like that's gone.
Yeah, so we've been hesitant on the general kind of second half snapback for the industry. We've been quite cautious. We actually downgraded the sector at the end of the March. We downgraded some stocks at the same time. And I always have to say this, all semiconductor companies, regardless of what they say about visibility into end demand, it's precisely zero. They're at the back of the supply chain. They don't know. And so that was always a risky call for any of these companies to make. And I think it's becoming increasingly clear it's not going to happen. And with Huawei, it causes more problems. Now, with Broadcom, you asked your first question, they are trying to be conservative. And they are, look, if you're going to cut, go ahead and cut, and they're doing that. And they believe at this point, hopefully that they've taken enough of the broader extension of this into play, that they've cut enough. The problem we'll have, and why the stock is down today, is because it's just hard for the company as well as investors to actually really have total confidence that the bottom is in. If this was just, like I said, a direct Huawei impact, you could size it and account for it, and it would be fine. But the general broadening of the uncertainty causes more problems, and that's why things are down today.
Stacy, how broadly vulnerable is the entire sector of U.S. semiconductor makers to what is happening in China, not just with Huawei?
Yeah, so the direct impact from tariffs is minimal. The trade in raw semiconductors between the U.S. and China is actually quite small. It's less than $10 billion in each direction. And in the context of a $475 billion industry, that's not much of a problem. The bigger worry is most semiconductors travel between the countries inside other things that could be impacted. And so far, they really haven't. But if more tariffs get applied, that's a problem. It causes prices to go up for end products and demand destruction, everything else. And then in general, semis are just very macro driven. They're very related to the macro environment. And to the extent that uncertainty in trade and everything else is dragging down the global macro environment, that will cause problems for semis. I mean, they're kind of at the tip of the spear.